My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Yes, it is true. Market roared for not one, but 2 days in a row, despite the gigantic rate hike the Fed threw us yesterday. Dow tacking on another 332 points. The S&P gaining 1.21%.
House of pleasure.
And the Nasdaq jumping 1.08%. Buy! But everybody knew that 75 basis point rate hike was coming. The surprise yesterday was when Fed Chief Jay Powell made it clear that he's willing to pause and see how much the economy's weakened, even from his own hikes, before he decided to slam the brakes on again. He's going data dependent, which is exactly what the bulls like, and it allows them to trample the bears. Yet this morning I listened, frankly, flabbergasted. I listened to analysts and managers, one after another, telling people that we're now going into either a severe downturn or worse, a period of stagflation, which, of course, is the kiss of death of stocks. These so-called experts could not have been more negative, repeatedly hammering home that we're now in a recession, a technical term that gets trotted out whenever you get 2 straight quarters of negative GDP growth. So, therefore, stocks should be sold and sold aggressively. Sell, sell, sell. Sell, 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 sell. And worse, this is a recession with high inflation. Oh, that's a total nightmare we haven't seen in decades. Get out now! To me, as someone who's had to live through 40 years of people warning about stagflation, dumping stocks, only have to buy them back at much higher prices, I could not believe my ears, frankly. This new conventional wisdom, at least to me, is just a hideous wave of bilge being spewed our way, and I hate that I have to wade through it. I said I disagree with all these naysayers, and you had to buy, not sell stocks. Take the other side of their ill-advised trade. Said it out loud this morning. I said it twice. Look, nobody likes getting old, least of all me. But one advantage of being an ancient mariner is that I have seen so many cycles that I know when the Fed says one and wait, when the Fed's signaling that we've already taken the tough medicine that we need, you have to realize that you're no longer fighting the Fed when you buy stocks. What we heard from Jay Powell yesterday was extremely bullish, not bearish. How about stagflation? Other than the late 70s or early 80s, it's never really happened. But because it was such a formative experience for an entire generation, they wrote all sorts of books about it. You never hear the end of it. Now, back in August of 1988, I experienced my first bout of stagflation worries. I was running a small hedge fund with my then-wife, Karen Cramer. We were staying in a ramshackle hut on Fire Island. I had worked all week on my negative stagflation thesis. Oh, I was so smart. Thesis replete with all sorts of Jimmy Carter and Paul Volcker references. Oh, I was so historical. And I presented it to her. Lock, stock, and barrel, on a Sunday night before we went back to work. She listened, thoughtfully. She nodded. And then the next morning, she put every single penny of ours to work, buying stocks hand over fist. And then she borrowed about $50 million from Goldman Sachs on top of it to get even longer. Oh, I was fit to be tied. I always wanted to use that phrase. I was furious, especially because she did most of the buying when she asked me to get her a soft pretzel and Diet Coke downstairs. When I got back, I said, what gives? I said, except I actually used a few of the 7 words you can't say on television. How could you bet against your own husband like that?
That was easy.
Simple, she said. You represent the conventional wisdom, Jim. Everyone's saying the same thing, and therefore that thing would probably be dead wrong. Sure enough, the stagflation scare disappeared about as quickly as it came, and our fund made a fortune in about a week's time. That's what happens when everyone gets negative about something that's entirely chimerical and theoretical. Yes, there was some 2-quarter down deal that they're talking about, but there are trucks all over downtown trying to capture the recession story. Yes, there's something heinous for stocks when cash threatens as a competitor because you can finally get a decent return on certificates of deposit. However, the stocks will be the much better bet if the Fed beats inflation, and you can never, ever, ever, ever bet against the Fed, no matter how stupid you think they are. And by the way, I don't think they're that stupid. I know I'm in the minority. When the Fed gets out of the way, you have a real window. You got to jump through it. That's what happened today and yesterday. Today, when the averages exploded, aided by the recognition that we could be in a recession. That's right. If a recession really has arrived, that's actually good news right now. Many commentators are too young to remember that when a recession comes, the Fed has the good sense to stop raising rates, except for stupid Feds, and I told you this isn't one of them. And that pause means you got to buy stocks. It has always meant that. Always. Stocks like what? I don't know. Let's think about it. What would you buy? I don't know. How about Apple? Sounds good, right? It jumped in after hours trading on a better than expected quarter. I don't know. It's probably kind of purloined litter. Like, how about Amazon, which exploded higher on a surprise beat? If this is what a recession looks like, I got to tell you, I'm feeling pretty darn good. You know my view on Apple? It's new. It says own it, don't trade it. Once again, I saw people contorting themselves into knots, trading it, selling it, shorting it, covering it, doing everything except for owning the darn thing. They have no faith in management, producing the greatest technology achievement of our lifetime, one that sells great everywhere, including India this quarter, even in a post-lockdown China in the last month. Superb. Plus, unlike just about every other international company out there, they hedged against a strong dollar. Man, are they ever smart. Amazon, better than expected numbers and an even more exceptional forecast. Here's a news flash. During COVID, we forgot what we liked Amazon about so much. It's because it's cheaper. This isn't a stay-at-home stock. It's a stock of a company that crushes it in web services, which you would know if you watch the show, and also offers real value to all consumers, even newly cash-strapped ones. Plus, they're getting costs under control. They've already shrunk their workforce by nearly 100,000 people. What? Cost controls. We love them. Sure, Roku was an awful miss. Intel was horrendous. But you know what? Apple, Amazon, Alphabet, Microsoft. That's an awful good shopping list. Of course, some industries will experience a ton of pain now that rates have gone higher. Rate hikes are always good. Mortgage applications, 22-year low. There will soon be a glut of homes. After years of semiconductor shortages, I think chips will finally be widely available. Something that can quickly create a glut of cars, too. We know there are huge apparel gluts. There's goods gluts. Walmart's statement, Best Buy's this morning. This is an inventory glut recession, not a layoff recession. And that means you can buy stocks if there's nothing else bad from the Fed and or from Washington. Then it turns out that Washington has out of nowhere given you not one but two good things. They just passed the CHIPS Act with billions to set up domestic semiconductor manufacturing, especially in Ohio. Goodbye, Rust Belt. Hello, Heartland Valley. At the same time, it's looking like the Senate might pass hundreds of billions of dollars in green energy decarbonization incentives. You know what that means? That means an explosion of profits for the solar industry. But, yeah, guess what? Everybody's already thought about that. And the semiconductor industry, though, here's ones that are still working. Semiconductor capital equipment companies. Both of those cohorts ran. They could run again. The obvious ones have been taken. I think Carrier deserves to play catch-up thanks to a heat pump subsidy. Plus, there are shorts all over the place in places like Lamp Research and Applied Materials. Man, I'm throwing a lot at you tonight, aren't I? Yeah, they're going to make a killing. CHIPS Act. So you put it all together, and you recognize, as I've said again and again, the window to buy near the end of the tightening cycle opens and then closes in just a couple of days. The bottom line, I think that window has finally arrived, and you don't want to close it on yourself like just about everyone else I heard today told you to do. Hey, why don't we go to Dan in California? Dan.
Booyah, Mr. Cramer. Thank you for taking my
friend.
call.
Of course.
The question I have is regarding Callaway Golf. They've got I think it's like a subsidiary. It's called Top Golf. And I play golf about 2 or 3 times a week, and every single person I've ever talked to absolutely loves this thing. And my question is,
listen
how much
Dan,
will that help Callaway's golf?
Chip Brewer, we had him on. He's got to expand Top. Everyone wants Top Golf. I want Top Golf, and I'm not even a golfer. You know what? My golf friend Ben Stoto, who's also my research director in One Man Band, he loves golf. And I know that we play together, but that's the symbol Eli. Callaway Golf has got to put more Top Golfs. You're right. Mike in Maryland. Mike.
How you doing, Jim? Quick question to ask
Mike
you.
couldn't be better. How about you? What's up?
Good.
Lyft?
Why? Yes, as a company. Do you think they're going to recover from the stock? Or?
I don't care. As a company, as a car guy, it doesn't matter. Lyft is not making it. It's not cutting it. Nice people. All right, how about we go to Kyle in Illinois? Kyle.
Yeah.
Kyle. Go ahead. You're up, Kyle. You're up.
Jimmy Zucchini.
The zucchinis are coming in so great. Do you have any idea what more? Are there more things I can on Twitter? I'll learn tonight what I can do with them.
Well, you know what? Love your gardener. Love your garden, partner.
Well, okay.
Hey,
so
Kyle
what are
from
we
Chicago.
doing?
Jim, listen.
Excellent.
This is not a consumer recession. This is like a business supply inventory recession. Consumers have cash and they're traveling. Here's what I want to know. And they report next week. Buy before or after earnings? Expedia.
You know what? Oh, boy, you put a gun to my head, and the first thing I do is say, take that gun away from my head. I like the company of Expedia. I only held it this quarter. But you know what's better than Expedia? Alphabet. You get the travel and leisure, you get Ruth Porat, you get smart people, you got Waymo, you got Google Cloud Services. What more can I say other than YouTube? All right, the window to buy near the end of the tightening cycle opens and closes in just a couple of days. Buy. I think the window has arrived. Mad Money tonight, from pet food to health products. Nestle's at the center of the food and beverage and, believe it or not, sneaker economy. I'm learning more about how this company is navigating this challenging environment with the CEO. Then, could trash be treasure for your portfolio? I'm seeing WM could be the stock for you. Well, that's the old Waste Management. And after reporting a top and bottom line beat for the second quarter, what exactly drove the strength in the magnificent company that is Pfizer? I'm going to sit down with the CEO. So I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.